Welcome to Insights. I'm Eric. Thanks for joining us again this weekend. We're going to talk a little bit about silver and do so pretty quickly here. I don't want to go into detail of a full review, but I saw a chart here across the internet which some people either might have come across. It's from the chart store. It's not something that I'm plugging in any way. It's just you can see the source that's down here. This is a cup and handle formation of which people swear by them, and it's the same stuff that shows up on my charts and that you can see. It's coming from a lower base. The 3 and 4 cycles are down in this range, and we're slightly above the dotted line. So this is something that it could happen. But the problem is the expectations is once you see this or you create this expectation that this formation is in place and somehow it's bullish, you just assume it's a matter of time before we break out. And it could be a matter of time, but the question is can you really time it or anticipate when that's going to happen? For that to happen, or for that to know how that's going to happen, you're going to have to study energy. And I'm going to go to the precious metals DI for both gold and silver here. And we're going to highlight the bear cases only. And you can see that even though the uptrend for gold and silver, or the primary uptrends for gold and silver, have been in place for, I think, about 12 months, and maybe just recently gold's flipped back up, we're still being aggravated by a statistically significant bearish energy build. And then they show up, even though primary trends are organized in the past, then when they show up, they make actions grinding and slow and frustrating. When they relieve themselves or dissipate, when they go from down here to up in here, and I'm had the computer highlight them several, there's many of them if we look in the past, like regions in here, where we clipped up here, right here, right here, and right here. All these cups mark areas of which then acceleration takes place afterwards. And that is still what we're waiting for. We'd like to see this build not reach this level, but reach as high as almost even 60, maybe even on the lenient side about plus 0.50. We haven't come close to that yet. And that's something that it's, even though we have this cup and handle formation in play, it could be some time. You could frustrate yourself to the point where this circle could be lengthened and widened to the point where the handle still exists, but the breakout's not taking place. So trying to restrain yourself when you see these formations and restrain your expectations about what's going to happen. Until we break above the rim of the cup, not much is going to be there. But that rim of the cup, which basically is this area, it's this formation here. This is the handle. I just haven't circled it. Here's 2011. The handle itself could widen, but once we take out the rim, which is right here, that's where the upside targets come and take place. The handles are quite a bit higher in terms of where we are right now, probably in the 40 range. So this is not even a full view of it. We only go back to 2004, and we don't really see the intradays. These are weekly, so we're missing the intraday highs inside the price action. These are just the weekly close. So it's going to be longer term around the 40 mark before silver really then jumps the creek. In order for it to jump the creek, you're going to need energy, and then we're on the wrong side. And we're still waiting for that bullish white highlight or that sliver that we've seen before that sets it up and says confidence has been broken on the bull side enough that the invisible hand has aggressively bought. The invisible hand hasn't done that yet, so it is something that's going to be slow in progress. All this discussion doesn't invalidate the idea that these formations have some type of coiling action or power of consolidation. I look at this and I see cause building, and people can call it cup and handle, but I also think cause building is a better name for it, because cause building doesn't have the expectation that it's going to be an immediate breakout. Cause building first has to jump the creek, and to do that we need to see the energy build, and for this we cannot be down here, we must be up in here. And you can keep an eye on this inside the matrix. Subscribers have access to the precious metals DI. It's in the composite somewhere. I'm not in the matrix itself, but you can download it and take a look yourself, and you're going to be waiting for at least a DI spike above 60 We'd like to see a pretty significant energy build in DI2, which means this is going to have to be at least close to zero above, or in many cases, as a really powerful move right here. Saw DI2 reach almost 60 itself, or slightly under that. That was a really strong move. It was this move right here that fueled the whole advance upward. It is this large build that basically sent this price up for another leg upward. You're going to need to see something of that magnitude in order for silver to take out the cup, the top of the cup, and it's going to have to be, this would have to slide up in here, but it would have to be the 1980 and 2011 high. So it's not to say that these pictures are invalid. I just don't think you need to look at them and say, well, now I can invest based on hope and the concrete nature of these forecast or these drawings that are written out there. Yeah, they are interesting, but leave it at that. I mean, you still have to play this by the evolution of the trade. The evolution of the trade is going to follow the primary trend. We're going to follow resets, and we're going to follow energy build, and it's all going to follow a cycle. And this thing's really probably not going to go into acceleration mode until the energy build goes from here towards here, and it's just going to take time. It might be a couple months, and it could be as much as 6 to 12 months from now. I don't suspect it's going to be as long as 12 months, but we don't know. What we do know is that really powerful moves tend to see participation, which is WA, fall off of a cliff and bottom out almost at zero. So we're going to be down in here. We've goosenecked higher into about 39%, but this will roll over again, especially if people lose interest and think silver is never going to go anywhere. It is the point of which silver is thought that it will never go anywhere, which means it's about ready to go somewhere. And that's how the markets work. Majority is usually wrong. They think they're right, but the fact is the most successful traders in history usually do the opposite of what the majority is thinking and doing. So if that this is just something to keep in mind as silver moves through the evolution of the trade. The cup and handle is still in place. I don't see it as a cup and handle. I see it as cause building longer term, and even within then, there's cause building that's in the longer term cause building. Right now, we're organized, I think, to triple up. So we're not in cause building, but we may fall back into shorter term cause building again. It is that shorter term cause building that's going to create the energy builds, which are still not in place. We got to get off the bottom here and move higher. So that's the setup for silver. If you have any questions, let me know. If not, keep an eye on your precious metals. I don't think it's over, and I don't think we're done jumping the creek. And I think when the time is done, both gold and silver will probably be describing a backdrop of extreme economic disorder and pain, but that's not something that I really enjoy telling that's coming, but I think it will eventually. It's just a matter of timing it. So thanks for watching the video, and watch this coming through the summer. So thanks a lot, guys.